Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. He's speaking to us from Vancouver. Welcome back to the show, Bob.
Yeah, hi, Jim. Here we are. It's Friday, and fascinating markets this week.
Bob, we have a listener question. It's from Chris. He says, "Hi, Bob. It's my impression that you're a deflationist. When is deflation coming, and what will it look like for the average person? Will a $20,000 car sell for 10 grand? Will most consumer prices be expected to drop? It seems the Fed can always pump more money in and push prices up, can't they? In deflation, cash would be more valuable, and presumably so would bonds. So the 30-year bond bull market would continue, wouldn't it?" Thank you, Chris.
Yeah, Chris, good ranging question. Just technicality, though. I'm not a deflationist. I'm a financial historian. And on our work back in January, we expected the commodities to rally up until around mid-year. And then 1st of September, we got on to there's going to be a rotation into the next set of hot commodities. And that turned out to be, lithium, steel, another rally in copper, and everybody's going crazy about natural gas and aluminum, of all things. So, now, what you get when you survey the history of all of the great financial bubbles, you realize that there's certain characteristics that are common to each one. And we will get to whether you buy bonds or not as we go along here. And they get a certain pattern in key items as a great financial mania concludes, and that was whether it was 1929 or 1873 or the first one in 1720. And where we've been able to get the numbers, this is what happens. Real long interest rates, adjusted for inflation, go down. And a couple of months ago, at its best, they were down to something like minus 3%. And there's been minus real rates before in bubbles in the past, so it's not exceptional. And then the next one is that gold's real price, adjusted for inflation, goes down in the final phase of a great financial mania. And the real price actually went crazy up until 2011, and then it was in a long bear market. But I just looked at it yesterday, and that's a monthly plot on that thing, of course, with the CPI. And we can say it's basing, no longer going down. And then the next one is that we were able to get copper prices back to something like the 1830s. And they do, real, adjusted for inflation. In the final phase of a great bubble, copper goes up. And the other one is the senior currency, and it has a tendency to maybe dull or weaken during the final phase of a mania, but once it's over, then the senior currency becomes chronically firm against most commodities and most other currencies for most of the time. So the point now is that 4 items that are characteristics of a great financial bubble have done what they should do, and real long interest rates could be changing. If rates go up, then that one turns. The same thing with copper. All it needs to do is roll over. And so what we have the right action in the right items for the bubble. And then all I'm saying is that now, where many people who haven't taken the time to research financial history and perhaps got themselves familiar with the 1970s are looking at the radical policies of the Fed, and then with a U.S. Marxist government are then saying, oh, it's 1970s, inflation's going to come back again. And all I do is point out is that you have strength in commodities with each great financial bubble, and then it's over. And once it turns, and it hasn't turned yet, then you get deflation in most asset prices. So this is highly probable. The market is on the path to a contraction after doing with the four key items what it should do as you complete a great bubble. So now, to get to what one positions, we could get another rally in the bond future as this current speculation in nat gas and crude and aluminum rolls over. But on the longer term, you're going to have a serious problem in the bond markets with lower grade securities getting marked down and some of the worst perhaps going no bid. And then you also got the problem where a number of investment grade bonds get downgraded to no longer investment grade bonds. So interest rates for low grade stuff can go up a lot. And then even for long treasuries in the senior currency, in a full crisis, that interest rate can go up a lot as the bond price goes down. But that's going to be a trading feature. So for investors going into a possible post-bubble contraction, we would be long some gold, kind of like portfolio insurance, and we would be look at around a 4-year good grade corporate bond. So you won't get whacked with too much price change as bond prices get hit, but you'll get a return then going to cash or to a T-bill or something like that. That's going to be back to zero again. So, and then for Canadian accounts, owning good grade U.S. corporate bonds, you're liable, you probably get a pickup on the currency as well, where the Canadian dollar will fall relative to the U.S. dollar. So, and we've been looking for a low for gold stocks somewhere around November, and they've rallied nicely recently, but I think it's not quite there yet. We would look for a really identifiable technical buying opportunity in the golds somewhere over the next month or so. So, and then one of the features of a post-bubble contraction is that gold's real price goes up, and that enhances profitability in the gold mining sector, and you've had some of the best bull markets for gold stocks in post-bubble contractions. So once this thing turns, the next rally in golds could be the start of a multi-year bull market. So at the moment, we're cautious on the golds, but longer term, very bullish. And thanks for the question.
We'll have more with Bob Hoye right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, some of the headlines that caught your attention today. Calgary's incoming mayor declares war on energy. And in Calgary, a city built on oil and gas. Because I know she said her first priority when I saw her interviewed on television was to declare a climate emergency. So I guess that's a war on...
reasoning. There's a climate emergency. And I, as a kid, lived in Calgary for a few years, and I know what the winters are like there. I think global warming would be terrific for those parts of Alberta. But the interesting thing is that even the center of the oil patch in Canada cannot get a business-like mayor elected. It is astounding. So you've now got this one, and she out there, and just like Joe Biden, the first thing he did upon taking the presidency, somebody called that, Jim, a hostile takeover. And the first thing Biden did, of course, was declare war on oil and gas. And they're crazy. You can't get by without hydrocarbons, either coal, natural gas, oil, needed in so much petrochemicals, everything. So, but there you are. The Canadian oil patch has to suffer a mayor who is a with it wokester and hates hydrocarbons. It's amazing.
I saw a report from the International Energy Agency that said because so many pension funds now have gone, quote, green, we're not getting enough investment in oil and gas, which will lead to shortages and much higher prices, maybe $100, $200 a barrel. Imagine that at the pump.
Well, the rush, I did see a headline during the week, Jim, that some options out there are hinting that crude's going to go to 200. But I don't know. I don't think so. Not that far. But at any rate, at the moment, they've got crude, nat gas, aluminum pretty hot. Although nat gas a few weeks ago got so hot that it registered some technical excesses and is correcting. And also, just the other day, the very hot action in aluminum also generated some technical excesses. So we can watch for perhaps a change in the one-way street that's going on now in some of these selective commodities. I mean, it's strange in the commodities. You got steel rallying up to the high in May, but in May you also had iron ore price going straight up, became excessive, and then it's had a horrendous correction. And yet now you got steel and, as I said, aluminum. So it looks like final stages where the bulls can't push up all commodities together like they did in 2011, which was the last big high for commodities. But they've now become selective, and there's only a few they can run with. So we'll watch and see how this all works out. But I'm amazed at Calgary, and I think we'll probably discuss this one again at some time.
Well, again, the goals are admirable, but you just can't stop. I mean, it took 100 years or I think it was 40 years to actually go from horses to cars. You can't do it overnight. And Europe has paid the price for trying to go instantly to wind power. And then their wind farms were becalmed. There was a cold wave, and the next thing you know, natural gas went from $9 in the Netherlands to $39.
Oh, yeah.
Yeah.
Oh.
So, you have to be careful when you transition. Like I said, the goals are great. Also, President Biden, yes, the very first thing he did was cancel
may be great in their minds, but what you have here, Jim, is that the totalitarians want to run government and society their way, and there is no other way. And their intent to shut down coal, natural gas, and oil generation of electricity. But bringing in the replacements in windmills as solar cells and batteries, they're not bringing them in fast enough to offset what they're shutting down on reliable power. So it's the objectives in their mind are admirable, but their approach is very poorly done. And then the other problem with using solar, wind, or battery power is that it's a very I'll go the other way. When you use hydrocarbons, coal and natural gas and fuel oil, the energy is very intensely packed. But in wind and solar, it's very unintensely packed. It's very weak source of energy. And but mind you, there is hope. I'm beginning to get this idea that perhaps the extreme left may relax some of its suspicions and superstitions about nuclear power. And that is really quite good, because you can build small nuclear plants close to where you require the electricity. You don't have to have miles and miles and miles of power line going across the country. But it's a fascinating experiment, Jim, and we'll see how it all goes.
Yes, and if you use helium as a coolant, it doesn't become radioactive if there's a leak.
Oh, I'm so relieved to hear that.
Yes, of course we have a shortage of helium because it's a naturally produced.
Where do you get helium
gas.
from? Oh, natural gas production in Alberta.
Yeah, there you go. China plunging construction starts. Well, they only have 190 vacant properties now. Why build more?
Yeah, these are vacant apartments, vacant condos. And the numbers you mentioned, is it 190 or 180 million of them?
Yes, that's from friend of the show, Danielle Park.
Oh, right, yes, yeah. So that's an incredible number. And that reminds me of after the 1873 bubble, in which there was a lot of hot action in railroads. And then afterwards, Commodore Vanderbilt, who was one of the wealthiest guys at that time, observed that it was ridiculous to build railroads from nowhere to nowhere. And here you've got the Chinese building roads, railroads, from empty apartments to empty apartments. I think there's some similarity there. But time will tell.
An early freeze across China has led to an energy crisis there. More problems on top of Evergrande?
Yeah. Well, they've been building new coal-powered electrical plants as fast as they can. And then somehow it's like the rest of the world, there's a sudden shortage of electrical power. And then you now with and the headline was that the cold was across large parts of China. So then you got to crank up the thermostat to get some warmth for residential, and also for any industrial plants. The heat loss around the plant is important, and you got to heat whatever. So here we are. Even though they're building coal-generated plants as fast as they can, they actually have a shortage here now. So, again, I think all of this is climactic. Sort of now, one can never pinpoint which week it's going to conclude, but somewhere within, I don't know, Jim, maybe 5-6 weeks, this whole sector, a hot sector now of lithium, steel, natural gas, aluminum, all of this stuff will kind of blow itself out. It just seems to be, there's so many people shouting and playing about it, and we saw the same thing for the hot items going into May. Lumber, corn, soybeans, copper had a good rally then. So, It's a selective rally here in commodities now. Not all commodities, just some fringe ones that they can do a pretty good job of rallying. So, going to be fascinating to watch, Jim.
Headline: Goldman Sachs joins bank bond frenzy with a $9 billion jumbo issue. What's the story there?
There's seems like the demand for bonds is infinite. And of course, there are corporations who provide the product and do issues of bonds, and then of course you got the underwriters who get the fees for placing the bonds. So again, but a $9 billion ticket is a pretty big transaction. So it's part of the party, Jim. So we've got a mix here of headlines where party items. And then you've also got the headlines that we've seen and followed for months now about Evergrande in China. And the headlines are contrasting. Some items are saying party time, and others are recording the hangover that follows every party. So it will, of course, end at some time. And as the saying goes, when the Federal Reserve is filling up the punch bowl, everybody parties until they fall down. And we'll be watching for the next fun fall down period.
Headline: U.S. housing start permits tumble in September. Well, don't housing starts decrease in the fall anyway?
Well, that's probably a seasonally adjusted number, Jim, so it did get a headline. And I don't follow it that closely. I just wrote down the headline that there was, and this is sort of like a negative thing. And we've been watching the Home Builders Index, and it's been acting toppy, looking quite like it did back in 2007. So, but one of these things is, Jim, with the headlines, I picked the most sensational ones, and this group for this week had party animal time, and it also had hangover type of headlines. So, and at some point, earlier in the year, the sensational ones were all bullish, and then somewhere at some time in the future, the sensational ones could be all bearish, or catastrophic, or oh dear kind of thing. So we'll watch and see how it all goes. So it's an interesting way to approach decision making in the markets, and I like to do it because it adds some color. But then everything we do, of course, is backed up with technical and very detailed research. So, and then when for example, a couple of weeks ago on natural gas, when you had our technical indicators at fairly high extremes, and then also just this week, aluminum got up there and generated upside exhaustions in the sequential sell. So this provides a rational way of measuring speculation, and the headlines is sort of anecdotal way of recording speculation, and I enjoy putting them down because back when I was doing the historical research decades ago, and you're reading, say, The Economist weekly in 1870s and making notes, what did I do? You put in the headlines. Or in the 1920s, late 1920s, reading Barron's each week and then making the notes and putting in the headlines. So, Jim, I've been doing headlines for 40 years, I guess. Hope I can do them for another 40 years.
That would be interesting.
Okay.
My guest has been market historian Bob Hoye. Thanks a lot for doing the show.
Good to be with you, Jim, and we look forward to next week.
Bob's the chief investment strategist for chartsandmarkets.com. He loves to answer your questions. You can send them to info@howestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of How Street Media Incorporated.